In 2008, one bank collapsed, and the world economy followed.
Markets crashed. Billions vanished. Fear spread everywhere.
This was Lehman Brothers, one of the most powerful investment banks in America.
For decades, the bank controlled billions of dollars and global financial influence.
Then the American housing market exploded, creating massive financial profits.
Banks began approving risky home loans for millions of unqualified borrowers. Trust disappeared, panic increased, and money stopped flowing into the bank.
When homeowners stopped paying loans, the housing bubble finally collapsed.
Lehman's stock price collapsed, destroying investor confidence. Trust disappeared, panic increased, and money stopped flowing into the bank.
Inside Lehman, employees realized the bank was running out of available cash.
The situation became critical as lenders refused to provide emergency funding.
Media outlets around the world began reporting Lehman Brothers' financial collapse.
Government leaders discussed whether the bank should be rescued or allowed to fail.
By early morning, the final decision had already been made behind closed doors.
Millions of families suddenly faced financial uncertainty and economic fear.
Lehman Brothers officially filed for bankruptcy, ending over 150 years of history.
Shockwaves immediately spread across Wall Street and the global financial system.
Stock markets collapsed worldwide within hours of the bankruptcy announcement.
Businesses closed, jobs were lost, and the global economy entered recession.
The United States government now faced the biggest financial emergency in modern history.
Slater lows. Officials rushed to design emergency plans to prevent the entire banking system from collapsing.
Trillions of dollars were prepared to rescue failing banks and stabilize financial markets.
Slowly, markets began stabilizing, but investor confidence remained fragile.
Meanwhile, millions of ordinary Americans continued struggling with unemployment and debt.
Small businesses collapsed as credit disappeared from the financial system.
The global recession officially became the worst economic downturn since the Great Depression. From America to Europe to Asia, economies slowed and markets struggled to recover.
Banks were forced to rebuild systems and strengthen financial regulations.
But the memory of Lehman Brothers still haunts the modern financial world. Years after the collapse, the financial world still studies Lehman Brothers as a warning.
Excessive risk, poor regulation, and uncontrolled lending created a financial time bomb.
Economists continue analyzing the mistakes that triggered the global financial crisis. Before the crash, many executives ignored warning signs while profits kept rising. When confidence disappeared, the financial system collapsed faster than anyone expected. Today, banks use stronger risk controls to avoid another catastrophic collapse. Public trust slowly returned, but fear still remains in times of economic uncertainty.
Markets continue moving between stability and risk in the modern financial era.
History reminds us that financial disasters can repeat if lessons are forgotten.
The fall of Lehman Brothers remains one of the most powerful financial warnings in history.
The collapse changed how the world views risk, banking, and financial responsibility.
Governments introduced new regulations to prevent banks from becoming too powerful to fail.
Banks now undergo stress tests to measure survival during economic disasters.
During the crisis, people feared losing access to their own savings. Governments introduced new regulations to prevent banks from becoming too powerful to fail.
Financial institutions rebuilt security systems to protect customer deposits.
A new generation of businesses emerged after the recession ended.
Slow economic recovery eventually restored jobs and business growth.
Experts continue studying Lehman Brothers to prevent future disasters.
The financial world recovered, but the lesson remains permanently engraved in history.
Years later, global markets slowly returned to stability and long-term growth. The United States. Banks now operate under stricter rules designed to control dangerous speculation.
New financial laws reshaped how money moves through the global economy.
Free influence. Investors learned to diversify assets and reduce dependence on risky investments.
Financial education became a priority for future generations.
Technology transformed banking and improved transparency for customers.
Governments now prepare emergency plans to respond faster to financial threats.
Economic recovery rebuilt cities, businesses, and public confidence.
Historians agree the Lehman collapse permanently reshaped financial history.
The lesson of Lehman Brothers now belongs to the entire world.
After the crisis, the world slowly learned how fragile the financial system truly is.
Daily banking returned to normal, but trust was rebuilt very carefully.
Markets reopened with caution, discipline, and stronger financial supervision.
A new generation learned investing with greater awareness and responsibility. Economic recovery slowly restored confidence across global financial markets.
From financial destruction came stronger systems and smarter regulations. But history reminds us that financial stability is never permanent. Every generation must protect the economy from repeating the same mistakes. Modern systems now monitor risk faster than ever before. Strong economies protect families, jobs, and everyday life. The Lehman collapse reshaped America's financial future forever. Its impact reached every corner of the global economy. One bank's collapse became a lesson written into financial history.
The real question is not what happened then, but what happens next.
Because the next financial collapse could already be building right now.